Hey everyone, welcome back to the channel. If you're thinking about buying a home in 2025, there's a new curveball in the mix and it's called tariffs. Probably heard about them in the news, but what do they actually mean for your mortgage, the rates, and your dream home? Stick around because this video will be unpacking the latest in U.S. tariffs move, how they affect inflation, interest rates, and whether or not now is the right time for you to buy a home, and we'll look at that section by section. So, what are tariffs and why are they back in the news? First, a quick refresher. Tariffs are taxes placed on import goods, and the idea is to make imported goods more expensive so that consumers and businesses will buy American-made goods instead. Now, there's good in the theory for boosting domestic manufacturing, but it can also trigger higher prices across the board. In early 25, the U.S. administration announced new and increased tariffs on the broad range of imports, and we're talking everything from Chinese-made goods to steel, solar panels, electric vehicles, and even materials used in home construction. One standout proposal is a 10% universal tariff on all goods. Now, this is a big deal because both is about praise and criticism on global tariffs. Second, tariffs and inflation, the domino effect it'll have. So what's the connection between tariffs and inflation? Well, higher import taxes usually mean businesses pay more for goods, and guess who picks up the tab? That's right, consumers. If inflation ticks up due to these tariffs, the Federal Reserve might have to delay plans to lower interest rates. In fact, they might even consider raising them again if inflation heats up too much. And remember, mortgage rates tend to follow the broader interest rate environment. So higher inflation could lead to higher mortgage rates in the long term, and we're seeing some real relief right now. The third, the current state of mortgage rates in 2025. Now, here's where things stand. According to Freddie Mac, the average 30-year fixed mortgage rate is sitting around 6.64%, and that's a noticeable drop from the 7% rate we saw in 23 and 24. Now, part of the reason for this drop is investor behavior. Where there's uncertainty, like in tariffs threaten economic growth, investors tend to move their money into safer assets, like U.S. Treasury bonds. That demand pushes bond yield down, and mortgage rates often follow. But here's the catch. The drop in mortgage rates could be short-lived. If inflation rises because of tariffs and the Fed decides not to cut rates, or worse, raise them, mortgage rates could go right back up again. The fourth, tariffs and the cost to build a house. Now let's talk about new construction. If you're looking to buy a newly built home, or if you're a real estate investor looking to build, the next part is critical. Many home building materials like lumber, steel, and aluminum are imported. Tariffs on these materials increase the cost of building homes. That means developers will likely pass those extra costs on to you, the buyer. According to the National Association of Home Buyers, a 20% tariff on materials would increase the average cost of a new home to around by $9,200. The fifth, could tariffs actually help some home buyers? Well, something to consider. Here's the twist. Not every impact of tariffs is negative. If tariffs slow the economy and investors expect the Fed to cut rates eventually, we might see mortgage rates dip temporarily. For well-qualified buyers, that could mean locking in a lower rate and getting more home for your money if you act strategically. On top of that, higher costs in the construction market could slow down new builders. Fewer new homes might increase demand for existing homes, helping to stabilize home prices in certain areas or give sellers a bit more negotiating power. 6. So, should you buy a home right now? Well, let's bring this all together. The decision to buy a home right now depends on your personal finances, your local market, and how you feel about interest rates in the months to come. Here are 3 key takeaways to help you to decide. Lock in your rate if it's favorable. If you see a rate at 6.5 or lower range and you're financially ready, it might be worth locking in it now, especially if you plan to stay in the home long term. Second, understand your construction tariffs, how they affect your target market. If you're buying a home in an area that has lots of new builds, you might want to see how tariffs are influencing pricing. Third, factor in long-term affordability. Tariffs may cause fluctuations in everyday things from household goods to utilities. Make sure that your monthly budget has room for little economic unpredictability. My final thought, number 7, negotiating uncertainty with a strategy. The truth is we're in a moment of uncertainty, but that doesn't mean it's a bad time to buy a house. It just means that you need to be smart and informed. Keep an eye out on the Fed's next moves. Talk with a trusted lender about rates and buy downs, and work with a real estate professional like myself who understands national policies that can affect the local housing market that you're in. I always say that real estate is personal. It's about what works for you, your family, your goals. Tariffs are just one factor in a much bigger puzzle. The key is to stay informed and to act when the time is right for you. Thanks for watching. Drop a comment below. And if you're thinking about buying a home or have questions about mortgage rates in this economy, I'd love to hear from you. Take care, and we'll talk soon.